Expectations that the Federal Reserve will cut interest rates is pushing gold prices to fresh record highs, but one market strategist says that the best is yet to come for gold.
Hi, and welcome to Minuteman Precious Metals, where it's my goal to enhance your financial preparation and prosperity and motivate you by tracking my personal stacking adventure. Thank you to all my new and returning viewers. Please like and subscribe if you enjoy today's content, and ring that bell icon if you'd like to be alerted when new videos are available. I appreciate your views, but I need your likes and subscriptions to grow this channel. Thank you for your support.
In an interview with Kitco News, Robert Mintner, Director of Investment Strategy at abrdn, said the Federal Reserve Chairman Jerome Powell's testimony before Congress last week appears to be the watershed moment markets have been waiting for. During his 2 days of testimony on Capitol Hill, Powell told Congress that risks to the economy are now balanced. Elevated inflation is not the only risk we face, Powell said in his prepared remarks. Following last week's comments, gold prices managed to hold support at $2,400 an ounce and have now broken the top range of their 2-month consolidation, with August gold future prices hitting a new all-time high of $2,470.20 an ounce. The rally comes as markets have all but fully priced in a rate cut in September. Mintner said that he is not surprised that Powell and the Federal Reserve are shifting their focus away from inflation. He noted that rising consumer debt in an elevated interest rate environment could pose significant risk for the economy. Mintner pointed out that higher interest rates have driven up car loans, along with interest rates on credit cards. It's not just the Fed fund rate. It's not just the prime rate. There's a lot of credit market products that are higher than they were before, he said, all of which argues for a lot less leeway. It isn't going to take much labor market stress to really cause a problem. Although risks are rising, Mintner said there's still a chance that the Fed can avoid a recession, which is why gold has so much potential. There's a lot of risks, and the Federal Reserve is a little late, but they're not fatally late, he said. This is why there's a strong case for a September rate cut. Because the Fed is behind, they will end up doing a little more and be a little faster and try to catch up. Mintner said that in this environment, it's only a matter of time before investor demand drives gold prices significantly higher. As to how high gold prices can go, Mintner added that he is no longer focused on specific price targets, as he pays more attention to the trend and upside potential. With its new all-time highs, gold prices are up more than 19% in 2024. But Mintner said this is just the start of the precious metals' full potential. Mintner pointed out that holdings in gold-backed exchange-traded fund products have fallen to their lowest level since 2019. He added that all the buying during the pandemic has been completely unwound in the last 2 years. Mintner said that this trend is already starting to reverse and will only pick up momentum as the Federal Reserve embarks on a new easing cycle. Powell, with his comments last week, sent investors an invitation to gold's party, and now we're just waiting for the RSVPs, he said. When you look back at the last 3 federal fund cycles, they resulted in gold eventually rising 57%, 235%, and 69%. At the same time, Mintner said that he doesn't expect central banks will stop their gold purchase programs anytime soon, as they continue to diversify away from the U.S. dollar. He pointed out that emerging market central banks hold only about 5% of their federal foreign reserves in gold, while developed market central banks hold about 12% of their assets in gold. While gold is attracting the most attention, Mintner said that he's also bullish on silver and copper. While investors are all jumping in on the AI bandwagon, he said that few people are paying attention to the infrastructure needs to drive this new technology. He explained that the world is going to need a lot more copper to meet growing energy demands. At the same time, he expects silver to actually outperform gold as a momentum in the precious metals market picks up. Looking at the last 3 rate cycles, in 2000, gold went up 57%, but silver went up 65%. In 2006, gold went up 235%, but silver went up 318%. And in late 2018, gold went up 69%, but silver went up 101%, he said. Silver is the higher beta play.
Let's call it there. Thank you for watching, and remember, time is your most valuable asset, and I appreciate you sharing yours with me. Minuteman 6 signing off.